Imagine waking up one morning to find that the world's most trusted financial system, the US government itself, missed a payment, not a bank, not a corporation, but America, a nation that has never fully defaulted, suddenly unable to pay its bills. What would happen? Would the dollar collapse? Would global markets freeze? Would everyday Americans even notice? Here's the real mystery. How can the richest nation on earth be just one political disagreement away from financial catastrophe? And more importantly, why is a country with unlimited borrowing power always on the edge of a debt crisis? Today, we're diving deep into the US national debt system, how it works, why it's so fragile, and what would truly unfold if America ever defaulted. And the answer is far more shocking than most people realize. To understand what a US default means, you first have to understand something fundamental. The US government borrows money every single day. But it wasn't always like this. After World War II, America emerged as the most powerful economic force on the planet. The dollar became the world's reserve currency. US Treasury bonds became the global safe asset. Countries, banks, corporations, even rival governments trusted the United States more than they trusted their own systems. Why? Because America had a reputation. It pays its bills. Always. Except, that's not entirely true. There have been moments when the US came dangerously close to defaulting. 1979, 2011, 2013, 2023.
Not
Because it ran out of money, but because of politics. And this is where the twist begins. America's biggest financial vulnerability isn't economic. It's political. How the debt system began. The modern US debt system started in 1917, with the creation of the debt ceiling, a limit on how much the government could borrow. It was supposed to simplify wartime funding. Instead, it became a political weapon. From that point forward, Congress would repeatedly raise the ceiling 100+ times, because America kept spending more than it collected. But why not just stop spending? Because the US economy depends on borrowing to grow. The government borrows to fund programs, businesses borrow to expand, consumers borrow to live the American dream. Debt isn't a flaw. It's the engine. And that's why default is so dangerous, because it doesn't just affect government spending. It attacks the foundation of the entire financial system. How the debt grew to unimaginable levels in the second half of the 20th century. US debt grew gradually. But after 2008, something changed. The financial crisis forced massive government stimulus. Then came tax cuts. Then record military spending. Then the COVID-19 pandemic, injecting trillions more. Today the national debt is more than $34 trillion and climbing. But here's the twist. America can technically afford this debt. Investors still trust US Treasury bonds. Global trade still depends on the dollar. And countries like China and Japan keep buying US debt because there's no safer alternative. So if the world trusts the US so much, why does everyone panic when default becomes even a remote possibility? What a real default would look like. Let's walk through the scenario. Moment by moment. Phase 1. Missed payment. The US Treasury is scheduled to pay interest on its bonds. If Congress fails to raise the debt ceiling, the Treasury legally cannot pay. One missed bond payment is enough. Within seconds, markets freeze. Phase 2. Global shockwave. US Treasuries are considered the safest asset in the world. If America fails to pay, foreign governments panic, banks dump bonds, interest rates skyrocket. The stock market crashes. This isn't just a recession, it's a global financial earthquake. Phase 3. Domestic chaos inside the US. Social security checks are delayed. Federal workers go unpaid, military funding halts, government services shut down. This isn't theoretical. In 2011, the US came hours away from default, and the result was $2.4 trillion wiped from markets. America's credit rating downgraded for the first time ever, global confidence shaken, and that was without an actual default. Imagine what a real one would do. Phase 4. Dollar crisis. If the world loses trust in the dollar, imports become more expensive, inflation surges, investors flee, other currencies rise. The global financial system would need a new safe asset, and none exist. This is why economists call a US default unthinkable. Long-term consequences. Once a nation defaults, the damage is permanent. The US would face higher borrowing costs for decades, loss of global leadership, reduced military influence, a weaker economy. lower confidence in the American financial system. Countries like Russia, China, and Iran would use the crisis to argue that the world should move away from the dollar. This could trigger the end of the current global financial order. Why America keeps repeating this crisis if the consequences are so catastrophic? Why does the US keep playing with fire? Because of the debt ceiling itself. It doesn't limit debt. It doesn't control spending. It only controls whether the US pays for spending it already approved. In other words, Congress fights over bills already due. Presidents from both parties, economists, and even former Treasury secretaries have called the debt ceiling a dangerous relic. But here's the real pattern. Every few years, politics breaks down the debt ceiling, becomes a bargaining chip, markets panic, the crisis is resolved at the last minute. Every single time. It's a cycle with no end. In 2023, the US reached its highest level of debt relative to the size of the economy since World War II. The Congressional Budget Office projects interest payments will exceed national defense spending. Debt will reach $50 trillion within a decade. Mandatory spending will swallow the federal budget. The US isn't running out of money. It's running out of political cooperation. Meanwhile, 70% of global trade uses the dollar. 60% of global reserves are held in dollars. Over $7 trillion in foreign-held treasuries depend on US stability. A default wouldn't be an American crisis, it would be a global crisis. So after everything we've explored, here are the 3 truths you must remember. Takeaway number 1. A US default is a political crisis, not an economic one. America has the money. It has the resources. It has the ability to pay. What it lacks is political unity. Takeaway number 2. The US financial system is built on trust, not cash. Once trust breaks, the entire global economy feels the shock. Takeaway number 3. The world relies on the dollar more than any single country relies on its own currency. A US default wouldn't just hurt Americans. It would destabilize the planet. So here's the warning. The United States may never default, but the risk of default grows every time the debt ceiling becomes a political battlefield. And the next time, the world might not get lucky. If this video helped you understand the mystery behind America's debt system and what is truly at stake, make sure to like this video, subscribe, and share it with someone who needs to understand how fragile the global economy really is. Because the question isn't just what happens if America defaults. The real question is, how long can a system survive when trust is its only foundation?